The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. I'm going to start off with the VIX chart today because that tells us a lot about the psychology of the market. And as you can see, we did take out the previous day's high when the Dow was down about 120 points. We've since come back pretty strongly. We're back and filling, I guess, is what you would call it. But the VIX is really telling us quite a bit, so far anyway. It really needs to close up in near that 16 level for this thing to get moving to the downside. I don't know if it's going to happen on this leg or not. You know, we're having, the market goes down, rallies up 250 points from Friday, and then goes right back down and made new lows. So this is a pretty volatile market, which is ideal for pattern recognition, but it can scare the bejeebies out of most people that are just watching it on a daily basis. The psychology of what's happening in the market is interesting because the next chart I want to put up here is to show you the Treasury notes and Treasury bonds together, because this will give you an idea that what's happening, because the Treasury bonds have been absolutely massacred here. They've been hit very, very badly, whereas the Treasury notes, you'll notice it's on the long-term trend line from last September. It's hit the 61% retracement back in March. That was on March 11th, that very key cycle date that we've been talking about for a long time. And now today's low, down at 127, is the 61% retracement continuation line, but it's also the 786 trend line from the low on March the 11th. So this is it's telling us that we should be at really key support here. The bonds don't have any support at all. I mean, they've broken down to a point where I don't think anybody in the world even wants to look at them, but that's probably when you want to start watching them. Now, just to show you the overall nature of what's happening with the market here is if we look at the Treasury bonds and then we compare them to what's happening with the junk bonds, which are the high yield bonds, you're going to see an amazing thing here, because the junk bonds are hardly moving at all. They could barely make a 382 retracement of the low from March, whereas the Treasury bonds have already taken that low out. In other words, Treasury bond yields have skyrocketed, and the yields on the junk bonds have hardly moved at all. To me, that tells me that there's just absolutely no fear in the market as of yet. The last time we had fear in the market in junk bonds, that was during October, December, where they dropped about 15% in a matter of, about a month and a half. But nothing like that is on the horizon right now, at least not yet. It hasn't started, because you should start to see a dramatic move down in junk bonds. And we barely touched the same low that we made yesterday. So this tells us that just not a lot of fear in that market, and I think that's an important thing to to keep in mind, because interest rates are what moves everything. And so keep in mind that number on the Treasury notes today, the 786 retracement, is near the low of the day. So far, the low of the day is 127.01. That's pretty close to the 786, which is 126.31, which was $13.25 from the exact number. So this is a really key spot here for bonds to hold, because if we break much below that, we're going to be breaking that long-term trend line that goes way back to September. I think we will break it, but whether we'll break it on this leg or not, I'm not sure. We're down about 10 days in bonds, which is a very unusual event in itself. Usually it's up 2, down 3, up 3, down 2. But when you're down 10 days in a row, that's telling us that you still have a great deal of selling in the market. But whether it's getting close to this spot or not, we will have to wait and see if this is going to be the case. It's going to be an interesting phenomenon no matter what. there's a charts that I have to show you folks. I was going to save this for the commodity show tomorrow, but you literally have. We've been talking about this last week in the market, and this is the coin market. The corn market, as you can see, the cash corn hit the exact 61% retracement yesterday to the exact penny, folks. I mean, right spot on, 355 and 3/4. We since have rallied about 15 cents off of that bottom, which was really good. But the next charts are the ones that I think you'll enjoy the most, because if you like the ABCD patterns, those are the ones that I think most people understand. And you'll notice here that in the December corn, which is the new crop corn that's being planted right now, we also made a perfect retracement yesterday, coming in at that $3.73 per bushel level. And that was a perfect ABCD pattern coming in. It was coming in at exactly the same time that the cash corn was hitting the 61% retracement. So that set up a really low risk buy from that point. Now, if we take a look at July corn, which is the old crop corn, you're going to see the same scenario that we had with the, give me 1 second here, we'll put it up here. You'll see the same scenario that we have here with the July corn with the large ABCD that's also in there, but there's a double ABCD and also a butterfly pattern that is happening. And so you got to be really really careful to make sure it doesn't go below that low that we had yesterday. That's the key, in my opinion. And we'll have to wait and see how that's going to turn out. One of my good friends, Stan Harley, I've known him for well over 40 years. He's one of the guys that used to hang in the old Conti commodity office down in Westwood, California, near UCLA. And Stan has consented to us to share his trading day cycles that are in there. And as you can see, he's had some pretty interesting trading dates that are coming in, and the one that he's looking at there is the one that just happened here in April, and he's thinking that could be some very important times. Now, these are trading day cycles, folks. They're not based on Fibonacci or anything like that. Those are just time counts that he uses with a great deal of success. And what you try to do is to match these time counts in with the patterns. And all I'm saying is that something big is coming. I don't know what's going to happen, folks. When you can get the Treasury bond market to do what it's done these last 4 or 5 days, somebody knows something out there. There's got to be something big to get this much selling. That market is huge. It's much, much bigger than the E-mini S&P or gold or crude oil. It's just a huge market. And the Treasury note market is 6 times bigger than that one. So the interest rates spiking like they have, and they're spiking abroad, and that's what's making the euro go crazy to the upside. So those are the things that are telling us that something big is going to be out here. But what it is, I don't know. One of our listeners asked it that Bill Gross probably knows. Well, one thing I know for sure, that if Bill Gross knows, he's probably not going to tell us. He keeps everything pretty close to the vest, as I recall. I've met him a few times because he used Conti Commodities to hedge his bond portfolios while he's starting out, but then later on, they own their own clearing firms and stuff. So he's a very nice fellow, and he's my age, so he's a little younger than me. He's a couple of years younger than me, but he was just starting out and hit a proverbial home run, which is really great. So nice fellow too. He is a very nice fellow. The other question someone asked me about was the silver chart that I have with for Warren Buffett, where he said he had a whole lot of silver, 20% of the above ground silver back in February '98. I don't have that yet. I'm still I have it in another computer, but that computer is being rebuilt. It's a new computer. We're just, taking the guts of the old one, putting everything in. It's going to take me, not me, but the people building it are going to take another few days. And then I will show you that chart, when it happened and how it all happened, because he was telling everyone, how much he loves silver. And yet when silver rallied $1.20 that day, they were doing all the selling. So just keep in mind that Everybody, because somebody says something, just because it's on the internet, folks, doesn't mean that it's true. I think that's an important fact to grasp. And in fact, I think the internet is probably one of the most devious places that's ever been invented, because it can reach so many people, including children, and the stuff that's on there is it's really scary in the way that they can come in and hack and steal, and they get virtually no penalty for it. I mean, that's where you want. If you want to rob banks, go to the internet. I'm not recommending that, but that's a lot safer, because you could pack up and move and they can't track you down. So who knows whether that's going to be the case or not. Apple mentioned, or Basil was talking about the price of Apple. One of my questions this morning that someone had was Apple. We made that butterfly pattern when it went up to that 133 level. That was when the watch was first coming out, being introduced. Then it was delivered sometime in early May, and the market is not acting well at the present time, but we still haven't taken out that low of March 13th. As we take that out, then I think Apple will have a much more severe problem to the downside. But it's completed a major pattern up in this area, and we will we'll follow it day by day and see what it's looking at. We're having a sell-off in stocks today. That was not unusual to see something like that, but I did want to talk a little bit here. Give me a second here to get the NASDAQ up. There we go, because that has a pretty good idea of where we are. In fact, we're trading there just about right now, so bear with me here. We'll get this chart up so we can see it. We have some really nice cycles that are coming in here today. Whether it's going to be a short-term bottom or not, I don't know, but we basically have that 18-day cycle that's in there, and it is a really interesting one, because it's coming in right at the 61% retracement. We went a little bit below that today starting out, but it held up relatively well. So that's telling us that we have a pretty good chance here in the NASDAQ to maybe bounce a little bit. If we take a look at this on a little bit longer term, I've got to change this a little bit because we have to get the data. I can't get this darn data to work. Shucks. There we go. Hold on one second, and I will get this ready for you. It's really tough when you're trying to do this, and you'll see that we have. I'll draw the Gartly pattern in too, so you can see it, because we are at a really critical level today. There's I think we're going lower, folks. It's a question of whether we rally into this next little high that's due in the next few days. But that's just a temporary high, and you want to be able to watch it with some degree of confidence for sure. Okay. Question about commodities. Tomorrow's show is going to be with Rich Anderson. He's going to be our guest tomorrow. We're going to take a little break here. We'll be right back. Stocks are under a little pressure. Gold's down a little bit. And we have crude oil up on the day.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And when I was on the show Monday, I was talking to you folks about the Treasury bonds, how everything was lining up with price and time coming together. And, of course, it held the 786 for about 3 hours on Monday, and then has since, collapsed far, far lower. It's about 5 points from where I tried my original long position, and I took a very, very small loss because it started to work in my favor, so I raised the stop up a little bit. Still lost on the trade, but not too much. I was a little nervous because of all the wide range bars, and as you can see here, by looking at these wide range bars, they're very scary. I was listening to Basil's show, and Steve came on and talked about the psychology of trading and how he thought how important it was. It's not important. It's the most important thing. It's probably Mark Douglas thinks it's 100%. I probably think it's closer to 90%. The technicals might be 10%, but the mental part is 90%. In fact, some people that don't even use technicals, that know the mental part of this, don't even have to use charts because they trust their instincts and their basic overall decisions. So that's why they can say that. But I really believe that it's about 90% of trading. And if you're having trouble with your trading, folks, and you see how to do all the analysis and stuff, and you still can't make money, you really need to get with somebody. I think Steve is a good person. Steve Rhodes is a good person to get with. He's, first of all, he's extremely reasonable in price. He knows the background of all the material, and he does a really good job with it. And I particularly like the material because I know he gets some of his stuff from Tony Robbins, who I think was one of the best things for me, because it was able to, tell me that the things that I needed to learn, were very, very important. And it took me a long time to learn them, because the old Chinese adage, the smart man learns from his mistakes, but the wise man learns from the mistakes of others. And I was smart. I wasn't wise. So I had to learn the hard way. So just keep in mind that we have a good resource here at TFNN for the psychology, and I believe Steve will do a good job helping us with if you do need help in that respect. It's a good webinar to go to, I believe. The question that we have now is about the currencies. We're having this huge move today in the euro, 187 pips, which was a huge move, caught some people by surprise, and we have broken up into new high ground now, and that's pretty much what we're looking at. Well, it's interesting is, as we're on the air right now, the Treasury notes hit the exact 786 retracement right now at 126.31, and the only reason I know that is because the flash hit the price and I got filled. So we'll see what happens with the bonds and the notes from here. But the notes here, the risk is a relatively small amount. I'm only risking 10 pips, which is a very small, it's $300, so it's a very, very low risk, because if it turns, it's going to be a good one, and if it doesn't, it's not. I mean, that's not saying a lot, but that is saying a lot at the same time. But the same thing is true with bonds. I tried the bonds before, and they didn't work, and they're the weaker, so you want to buy the stronger of the two instruments, and that would bring you to the Treasury notes themselves. They are far stronger because they're just setting at the 786. One of the problems that we have with the Treasury bonds right now is that maverick month of June and September, when they didn't write the contracts the right way for delivery, and that's why things are a little crazy. But you want to be able to keep that in mind when you're watching that chart, because it can be a little bit hairy when you're watching it. So we right there now in the notes. We're going to see if it works or not, but this is where it should start, right here. And we'll notice I have my beeper on, so it only hit the price once. So I see it's trading there now, but it hasn't gone below it, and I have my beeper on below it because I want to be able to hear it. I knew I was filled, but I want to see how much action is happening at that time, and we'll see what happens. That's the good part about pattern recognition, is you can get to the point where you can you really have an indicator that tells you, yes, this is where it should stop within limits, and within those limits you've got to be able to say, well, we have to tell us that we are going to be a little bit slower on the trigger here because of the fact that we have bonds under such great pressure. So we bought the notes here. Whether it's going to work or not, I don't know. But this has got everything you could ask for in a trade. You're just setting right at that trend line. You've got the 618 retracement. You've got the 786 retracement. It all should stop right about now. And you can't ignore that this thing is certainly oversold. It is very oversold under anybody's stretch of their imagination. So that's a very, very strong point to keep in mind. Okay, we'll take a little break, and we come back here. We're going to talk a little bit about the show on Thursday with Rich Anderson.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been asked to put up the chart of the Treasury notes that we were talking about just now. As you can see, that dark green line that goes back through September, that's the 61% retracement trend line. And you'll notice that it touches right near the lows today at the 786 level. And so that number we're looking at came in at 126.31 is the exact 786 off that number that we were looking at. So it has a great deal of importance in my opinion. So all I was doing was buying against that line and risking 10 pips. Now 10 pips or ticks in the Treasury notes is quite a bit because that's equivalent to probably 30 pips in the Treasury bond. So just because of the volatility. You have lower volatility in Treasury notes than you do in Treasury bonds. So Treasury bonds, if you were doing this trade, you'd have to risk probably $1,000 or 1 full point. But with the Treasury notes, which move a lot slower, of course, but the stop there could only be 8 ticks, $250. So that makes it much more acceptable risk. The profit will be a little less if there is profit, but that could usually be the case. So we'll see. Oh, we've got a caller from Jim in Palm Harbor. Jim, are you there?
Hi, Larry. How are you?
I'm good, thank you.
I wanted to talk to you about probabilities and specifically about the E-mini. There's such a correlation between playing poker and probabilities and trading. There was a situation last week. Someone got in a tournament. Someone got a royal flush 2 tables away, and less than 20 hands later, the same person got another royal flush on a different suit. So
the odds of that are in the trillions.
It was pretty amazing, and exactly. At the break, he had a king 10 of hearts, and he hit the royal flush. And 20 hands later, he had a king 10. I'm not sure what the suit was, but he said maybe lightning can strike twice in a short period of time, and it happens. So it's interesting. You can lay out the patterns. You can look at it and say it's got to happen or it's not going to happen, and it's going to hit a retracement. And it was a pretty amazing story. But
I had not heard that, but it certainly blows me away that I've had 2 royal flushes this year, and you're not supposed to have more than 1 every 10 to 15 years if you're an active player. But I've had 2. Well, I had 1 late last year and 1 this year, and that is in itself. I won both of those hands, by the way, but it's very unusual, when that does happen, because it only happens once every 999,000 times. So you multiply 999,000 times 999,000, and that's what you come up with for the probability of getting that 20 hands later. And if you figured that into 20 hands, it would be in the trillions. It literally would be in the trillions would be the odds of that happening.
Yeah, it was pretty amazing. Specifically, I wanted to ask you about the E-mini. I had a position short from 1973. I did not put a stop in because I felt we were going to turn, even though we took the ride up, and then I reshorted again, covered that one at 1980. But I did not cover that second position, and I missed that spike low this morning. Where do you see a retracement?
Well, it's at a pretty good retracement level today. The problem is we've got such a strong downtrend in effect, and if it doesn't hold this level, it can literally, keep cascading down. The key thing to watch is, usually you've got to. I'm going to jump on your case here a little bit, Jim, because you're breaking a real cardinal rule here. And believe me, I shouldn't be the one telling you this, but because I do it. I want you to understand. You really have to protect yourself, because this market will give you so many good chances to get in. So when you have a bad position on, the pain of the gosh darn thing is what hurts you, buddy. It's the first mistake teaches you, the second mistake kills, and what'll happen is it'll destroy your trading soul. And when that happens, you are out of business, and you don't want that to happen. So when you think it's going to go higher and you're in a position, just get out and take the heat off and take a look at it. That's basically what I'm suggesting for you to do. We'll take a look here at this E-mini chart today, and we'll see what's going on. Hold on, we'll put up the hourly so we can see it pretty easily. All we did is we went down and we matched the low of 2070. Did we take it out by a tick or not?
I don't think so.
This one was 2070, and the other one was. Yeah, no. Well, we matched it. Absolute match. Absolute double bottom there. I don't think that's going to hold, because I believe, that's in an exact 618 of the low from way down here. Wow. Oh, no, it's not. I still think we could go to 2066 on this. Hold it. Let me put this up here. And it's got a lot of lines on it, but most people can see it anyway, which is okay. But we're going lower. I mean, this cycle high that we talked about April 27th. It's, we've got a lot of information from Bill Ehrman on that, but it came in right where it should have. It was a lower high in the E-mini S&P, and it was a slightly higher high in the New York Stock Exchange Index. So you had that divergence, and you've got terrible divergence in the transportations and utilities. The VIX index hasn't told anybody that the market's going down yet. That's the problem.
Well, last I looked, it was like 15.3, and I don't know if we broke back under 15 or not. And I guess we got to wait for the close. And I was looking at the chart of the DAX is really taking a big hit this week. And even I'm looking at Shanghai has come down. So looks like there is a turn this week. Selling may go away maybe.
Well, that seasonality thing is a tough one. The one that's more important for trading purposes, Jim, is the most bullish days are the last 3 days of the month and the first 2 days of the month. And so we had Monday and Tuesday come in, and of course, yesterday is when we started to. We had that big rally on Friday. We didn't follow through on Monday, so those bullish days are out of the way, and so more of a bearish days are due between the second and 10th trading day of the month. So that's another thing that we're watching here. But if we go below that 2070 level, we could easily get down to 2052. We haven't had a really bad day yet in the market. I think the worst day so far has been 150 or maybe 250 Dow points, which is nothing, and we're going to see at least 700 Dow points before this thing is over. I feel strongly about that, but whether it's going to happen right now or not, I'm not quite sure.
Is there a Bradley turn date this week?
No. Well, yes, the 5th. Yesterday was the 5th. There was a minor Bradley day yesterday. That's correct, yes.
Okay, then the spike this morning could have been the test as a high and beginning of the roll, I hope.
It could, or it could be a day off and be a bottom. You don't really know. You have to wait and see what the close is going to be like.
And I use that bad word, hope.
Oh, that's the worst trading. That's the worst trading rule you can get. I was talking to one of my daughter, and that's in Denver, and she reminded me about the time that I made a bid on this house in the neighborhood in Westlake Village. It was an upscale neighborhood, and it was about 3 times what the price of our house was, and I didn't do it because the ex-wife didn't want to move to that area, which was the right thing to do. But anyway, that's the way it happened. So anyway, don't have hope. That's no good. Hope is not a good trading word for sure.
You're right about that. You have a great day, and thanks for your time you put in all the time. Always look forward to your shows, Larry.
You bet. Thanks for calling in, Jim. I appreciate it. We got a caller, Brent from California. Brent, are you there?
I am, Larry. How are you doing today?
I'm above ground and staying away from open graves, my friend.
Good deal. I'm calling about Priceline today. I know it follows the patterns pretty nicely, and I'm looking for something potentially about 5% higher to complete that pattern. If you could take a look at it, please, on the daily.
Yes. In fact, this is a stronger than market stock. It is actually is higher today than than the other days, and it is not quite at the 786. It looks. Let me put this up here so everybody can see it. I'm talking about it and I'm not posting it. So, 1 second, we'll get this in here. As you can see, we have a 786 coming in at around 1297, and it's trading around 1270 and change right now. And that would tell us that we could easily get there. And this stock is strong in the face of a bear market. It's been up for 5 days. Including today, without any interruption. So it is a much stronger than market stock. I think the 1295 area is going to be pretty stiff resistance. So if you were to sell it today, I would stop it, above today's high if you wanted to do it. And that's a $1,200 stock. So that's what I see with it right now. But we could make 1296 without any trouble at all.
Yeah, I'm going to be patient and let it play out. What do you have, Larry, if you don't mind, as a 1-to-1? You said it's a 0.76. What do you have as a 1-to-1?
Well, I don't have a 1-to-1. All I have is the 786. All we did today was to take out the highs of February 23rd, and right now we're near the low end of the range. With the market backing off a little bit. So. I really don't have anything in Priceline. The number that I'd rather do it would be 1296, but we're not there. We're only at 1270. So I like your idea of waiting.
Yeah. If you take it from that low of around 1,000, isn't it more or less forming an AB equals CD up? Like
Oh yes, that would be one that would even be much higher than that also. I mean, that would also be one that would be quite a bit higher.
Yeah, that's what I'm going to wait for. I will start looking at it, like you said, around the 1290 area. I already have an alert for that, but it's done this before where it goes up about 1,300, then it falls apart. So I'm going to try to just be patient. If it does it, great. If it doesn't, that's fine. You know, just find something else.
It's much better to be patient than to be hopeful. That's
yes,
it's a one lesson that I've learned in this business over the years, is to be that way for sure. But the volatility that we're having is what is really surprised me. I thought it would be far more volatile than we are. This market is very acceptable for trading. It gives you a chance to go long. It gives you a chance to go short. So as long as you're patient and wait for the patterns, you should be okay.
It's been a great year so far. I've been having a very successful year. A lot of it I have you to thank for. So,
well,
again, just
you have yourself to thank. All I did was, give you a couple of good ideas, but you did the work, pal. Don't ever mitigate that. That's really important, because it's the mental part, Brent, as you know, and we chat on the phone occasionally. And you know the importance of the mental part, because you can't come in being tired. You can't come in after drinking the night before. I mean, this is just as draining emotionally and physically as professional golf. Playing on the circuit, something like that. So you really have to prepare yourself for this, because the slightest slip can cost you a lot of money.
I know, and that's really the things that you've taught me that have made the big difference. Just the risk management, just managing the trades, like I said, being mentally prepared, just all those things put together as a package. You have to do it, or you're going to just make the little missteps that, like you were telling the other person, can really be enough to take you out of the game if you're not smart about it. So I do appreciate everything you've done, and I hope you have a great day, and I'll talk to you soon.
Thanks a lot for calling in, Brent. We appreciate it.
Take care.
All right. Okay, all right. We had another caller, but unfortunately we ran out of time with him, so we'll see about that. There was a article on, not an article, but one of the commentators was saying that the Chicago Mercantile Exchange was thinking about bringing out a marijuana contract. Boys and girls, that is total baloney. That will not happen. I don't think during my lifetime, but we'll have to wait and see. Okay, if you have any questions, it's 877-927-6648, and we'll be happy to answer any questions. This whole process that we're seeing unfolding in all of these markets is related to the debt cycle that's in there, and that's these bonds and stuff, but we're not seeing any type of panic in the junk bond market at all. And if you stop and think, why is that the case? And I do not know the answer myself. I said, I would think that the junk bonds, when rates spike like they have in bonds and notes, that the junk bond market would come apart, and it did not do that. It even went through that whole period of when we had the oil collapsing, because junk bonds had so much to do with some of these oil companies that they didn't break down either. Maybe that's telling us the strength of that market is a whole lot stronger than we might actually believe. That could be the case. We don't know for sure, but that could possibly be the case. I don't know. I just think longer term we're heading lower. As long as we don't take out that high of April 27th, it looks lower to me. The key date is when we get below those March lows. That's going to be, by then everybody's going to realize there's something wrong, and it'll probably do it in a crash type scenario, because we haven't had that happen for quite a while now. It's been 28 years. Most of you folks were never around when that happened, and when you go back and look at it, it looks like a little pimple on the chart. It's so small compared to what it really was. Okay, we're going to come back, wind up the show here. Rich Anderson's going to be our guest tomorrow, and we'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we have a question from someone in the Tiger Den, and that's a very interesting question, that is comparing what happened in 1987 to what happened in 2008. The 1987 crash was basically a 2-day event. The Friday before, on the 16th, the market was down 106 points, and that was a lot because we were trading around 2,300. And then on the next day, on the 19th of August, October, let's try October, the market was down 16% in one day. So you multiply 16% times where we're trading at, roughly 18,000, you can see we're talking about a pretty hefty drop of about 2,700 Dow points in one day. Now, that would scare the bejeebies off of anybody. The problem was, it was not a problem, was that the market the next day on the 20th made a slightly lower low in October of 1987, and it was exactly to the tick the 61% retracement of the August 9th low of 1982, to the exact tick. And from there, the market went up tenfold. So we've had this huge bull market that's been going on for 30-some years, a bear market in interest rates, as interest rates have gone to, they have gone to zero, negative in some areas. So that's it. The problems that I see happening right now, and this is just my experience talking, I'm not jumping up and down on my sandbox or anything like that, but I see a problem in the debt market. I see a problem in junk bonds. I see a problem in treasuries. And I see a problem anybody that has debt, because something bad is going to happen. You just can't bring this much debt to the market like the Federal Reserve has done. And if you think they haven't done this before, they did virtually the same thing like they did in 1929. Basil Chapman had a fabulous webinar last night. If you haven't heard it, if it's a recorded, you ought to listen to it, because he goes over the relationships of these things. And Basil's bullish the market. He thinks we're going to have a sell-off here and then another run-up, which is certainly possible. We could do that easily. And but you know, we've got a debt market this time that is like nothing we've ever had before. Quantitative easing, they're going to have another name for that before it's all over, in my opinion. But we'll let history decide. I really believe that very strongly. In 1987, we had virtually no liquidity in the market on that day, because the bid spread on the S&P was let me see, it was 10 to 20 handles. That would be equivalent on the bid now. The S&P is trading at, say, 2080, and your offer would be at, see, 5 times. Your offer would be at 310, and your bid would be at 220. So you can imagine how crazy it was at that time, because it was 10 times the value, because we didn't have E-minis. We only had the large contracts. But remember, it was trading at 260, so that's you know, a lot cheaper, 10 times from where it is right now, 9 times from where it is right now. So there's a lot of differences. It was a crash, no question about it. Hurt a lot of people, but if you were on vacation and nothing happened, when you came back, your account was down, you know, down somewhat, but you know, if they'd have waited another 5 or 6 months, we eventually went above those August 25th highs of 1987 and continued to go higher for many, many years. So the pattern that we're looking here is the mother of all bearish patterns, though, because of the fact that it's got so many numbers coming together up around this 18,000 level and 2,100 in the S&P, and but it's still early. You know, nothing's really happening exciting yet. But I think the excitement is coming. The thing that we have to worry about, besides this debt, is counterparty risk. Who is on the other side of your trade? Because if you can't get that other person to verify that it's a valid trade, then you're in trouble. And I worry about these ETFs, because they're created out of thin air, and therein lies the question, thin air. So I'm just a little scary. Maybe I'm just paranoid. And remember, the paranoid person only has to be right one time to be proven correct. Ladies and gentlemen, boys and girls, live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. markets. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.